Everyone is talking about the Bitcoin halving event, which is set to happen in 2024. Amid the hype, tweets, and predictions about it, knowing how high the Bitcoin price can go is equally as important. We don't want to set our hopes on a stake and watch it crash later. During a recent hearing before the Financial Services Committee, Gary Gensler, the chair of the Securities and Exchange Commission, reinforced his stance on Bitcoin, explaining that it is not a security in response to questions posed by the Republican Committee Chair Patrick McHenry. Gensler elaborated his stance, highlighting that Bitcoin does not meet the requirements of the Howey test, hence its distinction from securities. Although he refrained from explicitly categorizing Bitcoin as a commodity, as Gensler has previously discussed the classification of cryptocurrencies like Ethereum, and during an interview with the New York Magazine, he implied that it could be considered a security. However, his reluctance to comment on Ethereum's status has bred speculation and discussions about the legalities surrounding various cryptocurrencies. On a humorous note, Congressman Richie Torres questioned the nature of transactions involving tokenized Pokemon cards during the hearing. Well, Gensler's response was cautious, saying that he would need more information to determine whether purchasing a tokenized Pokemon card on a blockchain could be considered a security transaction, although he affirmed that the sale of a traditional Pokemon card isn't a security. But moving on, the ongoing dip in the broader crypto market ecosystem is fueling a whole new bout of liquidations across the board. A couple of weeks ago, data from CoinGlass showed that the total liquidations on the market have topped $133 million, a trend that has predominantly seen long traders liquidated. As expected, Bitcoin had led the liquidations with a total of $40.63 million in liquidations recorded overnight. Long traders accounted for $37.95 million and short traders about $2.69 million. Ethereum ranked as the second most liquidated digital currency with a total of $12.14 million. The liquidation figure was then justified, seeing the price of both Bitcoin and Ethereum plummeting by a mile in a day. Now, crypto liquidations are not an uncommon trend in the digital currency ecosystem, and many experts even advocate it as a viable means to help the market reset after periods of explosive price momentum. Thus far, there are a series of liquidation reports, and naturally, the liquidations tend to clear off as market conditions return to being favorable. The crypto ecosystem has exhibited strong resilience over the past few months, and the current setback may be another springboard for new rallies. According to the current liquidation heat map from CoinGlass, there is a certainty that Ethereum will be hitting its highest liquidation value for this quarter if the downward pressure is sustained as the month wraps up. Furthermore, the potential bottom for Bitcoin looks more likely soon, considering that the upcoming halving is in April of 2024. Some altcoins might reach their bottoms before Bitcoin, and there will be a front run by whales, while others will align with Bitcoin's bottom. Nonetheless, concerns persist about the turnout of 2024. So many collapses have been predicted, which makes us wonder whether the year would offer anything good. The housing market price has been speculated to crash in 2024 as a matter of fact, and there are worries regarding the housing market in particular, especially the shortage of housing supply and the rising interest rates. The shortage of supply has been a primary driver of home price growth, but the increasing interest rates are discouraging potential sellers and new construction. As a result, there is a limited hope for an improvement in the housing supply and the establishment of a sustainable market that would benefit from increased inventory. The significant increase in mortgage rates since last year has further expanded the already expensive housing market, making it even less affordable. Home prices saw a meteoric rise during the 2020 pandemic, fueled by factors such as high demand, low supply, and record low mortgage rates. However, the sudden surge in mortgage rates has dampened the market's growth and affordability, thus posing challenges for buyers looking to enter the market. Affordability will be the source of concern for many, as home prices will continue to rise. With 10 years having now passed since the Great Recession in the US, there has been the longest period of continued economic expansion on record. The housing market has been here for much of the ride and continues to benefit greatly from the overall health of the economy. However, hot economies eventually cool, and with that, hot housing markets move towards balance. And housing market forecasts are essentially informed because they are based on current patterns. Increasing interest rates will almost certainly have a greater influence on the national housing market than any other factor. Sellers remain in an advantageous position, and price stability and the continuation of competitive interest rates may provide some much-needed relief to buyers, and it is safe to hope that a collapse will not happen. Now, as the Bitcoin network celebrated its 800,000th block milestone in July of 2023, the countdown to the next Bitcoin halving event has begun, scheduled for, once again, April of 2024. This significant occasion highlights a pivotal moment in the blockchain's journey and underscores the need for miners to adapt to impending changes. Like major Ethereum hard forks, Bitcoin halving events are prominent in the cryptocurrency industry. These events act as catalysts for potential bull runs and can significantly impact the mining landscape. The upcoming halving will reduce block rewards from the current 6.25 Bitcoin to 3.13 Bitcoin, cutting the new coin supply by 50%. According to historical data, there is a strong possibility of a substantial bull run around late 2024 to early 2025, driven by reduced inflation and increased demand dynamics. Now, let's try to sound convincing about this. After the previous halving, Bitcoin's price surged from $8,970 in May of 2020 to $56,670 in May of 2021, yielding an impressive 533% return on investment. Given decreased inflation and heightened demand, experts anticipate that the upcoming halving could propel Bitcoin's price towards the psychologically significant $100,000 mark by 2025. That's how much it can go up. For miners, as rewards are cut in half, they must adopt cost-efficient strategies to maintain profitability. Electricity costs emerge as a critical factor, even with a slight change in cost per kilowatt hour significantly impacting production, expenses, and negotiating favorable electricity contracts and relocating to lower-priced regions become vital strategies to sustain post-halving profitability. Miners should also prioritize upgrading equipment for improved power efficiency. Upgrading from less efficient rigs can substantially reduce daily hash costs, and those miners achieving the right balance of low electricity costs and high efficiency are poised to remain profitable amidst evolving dynamics. To mitigate the impact of reduced rewards, miners can explore strategies such as accumulating excess capital in mined Bitcoin during prosperous periods. This reserve can then be utilized post-halving to offset losses through strategic selling during price rallies. While we await more information about the halving event, it's important to note that the crypto industry court victory in late August has made it all but inevitable that the Bitcoin exchange traded fund will eventually come to market. Where it gets complicated is how long it will take if the Securities and Exchange Commission decides to keep offering resistance. In a worst case scenario, the SEC could delay the launch of the Bitcoin ETFs for 2 years or longer, according to a group of analysts from Compass Point Research and Trading. Quote, SEC Chair Gary Gensler has been so firmly against any actions that help crypto that it's hard to imagine him just rolling over and approving a spot Bitcoin ETF application without a fight. The analysts also argued that the court leaves little room for the SEC to ultimately win. In August, a panel of judges said that the SEC erred when it rejected a bid by Grayscale Investments to convert the Grayscale Bitcoin Trust into an ETF. The SEC had argued that there is insufficient surveillance on trading platforms to detect fraud and manipulation. The court also said that the agency acted arbitrarily by rejecting the GBTC application on the grounds while also approving the issuance of ETFs that hold Bitcoin futures tied to the same underlying market. However, even with the decision, the analysts wrote that the SEC could still resist. The agency had until October 13th to ask for an en-banc hearing to challenge the ruling in front of all judges in the U.S. Court of Appeals for the D.C. Circuit. The Bitcoin price, after rallying through the first half of the year, has lost momentum, crashing back and weighing on Ethereum, Cardano, XRP, and the wider crypto market. Jamie Dimon, the chief executive of Wall Street giant JP Morgan, had recently warned people that they should prepare for a worst-case Fed scenario, that something could spur sudden Bitcoin price growth. Bitcoin will grow, but it's a long journey from here, and there are probably several bumps ahead. There are crazy, unrealistic predictions out there. Don't fall for them. Historically, Bitcoin halving events are enormous opportunities, but it is safe to manage your expectations. We can't predict the future, for one, but the stats do seem to be in our favor. But that's going to do it for today's video. Make sure you click on the subscribe and notification buttons, and we'll see you in the next video.